Hi everybody, this is Lara at pureelliottwave.com. I'm going to be presenting as part of this FX Traders Edge Elliott Wave forecasting event on the 17th of August. I'm putting a link in the description box for this video. Please click on the link and go on through to this page and register for this event. You'll be giving me a lot of support by doing that. So that's what I get your support, but you get a whole bunch of free stuff. You get an hour's access to my analysis. I'll be covering Bitcoin and the S&P 500 live with you. And if I have time, I'll also cover NASDAQ. But wait, there's more. If you register for this event, you'll also have an exclusive offer to sign up for a free month of my Pure Elliott Wave Weekly on my website, pureelliottwave.com. That's once a week analysis of Bitcoin and the S&P 500 and gold and US oil for a whole month free. But wait, there's even more. If you register for this event, you're also going to get the opportunity to sign up and get a free copy of my ebook, Pure Elliott Wave. The rules in my book, which took me years to write, the rules are exactly the same as Frost and Preachter's classic Elliott Wave principle, but I've written it to try and be as clear and concise as possible. But wait, there's more. You'll also go in a draw to win one free lifetime access to my online course, Learn Pure Elliott Wave, which is normally priced at $395. Not only am I a CMT, Chartered Market Technician, and not only do I have over a decade of experience, I've been analysing markets since 2008, I'm also a trained, professionally qualified New Zealand secondary school teacher. I used to teach high school science, biology and geography. So coming from that angle, I've created some totally unique learning exercises as part of this course. If you're a kinesthetic learner, you'll learn by doing, and I find those learners the hardest to reach. So I've got some truly unique learning exercises to teach you Elliott Wave structures. There's 20 lessons. Most of them have quizzes or further reading, and as part of your access to the course, you'll have me supporting you via email to help you with your learning Elliott Wave. So there's a whole bunch of really good reasons for you to click on this link and register with FX Traders Edge, and if you do so, you'll be giving me a lot of support, and I really appreciate your support. Thank you. I'm going to look at Binance coin with you today. Coming up after this over the next few days, TLT, SMG and then DCR, but I think I'm going to bump Ethereum up the list because I get more requests for that than from pretty much any other coin apart from Bitcoin, which I do every Monday for my membership at Pure Elliott Wave. I haven't updated my chart. I'm going to show you how I do that. I've downloaded the data from Yahoo Finance. It's in CSV form, file, chart, import data, find the CSV file, there it is, uncheck these, import, done. Let's look at this at the weekly chart level, and it's on a semi-log scale as it needs to be. I'm just going to check, is this high above this? No, it isn't, so I don't want to see a truncated fifth wave. Oh goodness, oh, this is a little bit tricky. How do I want to see this? Well, I've got a cup of coffee here, so hopefully this won't take too long. I think for this one, I'm going to see it like this. I don't know about intermediate 4 lasting 57 days compared to intermediate 2 lasting 38. For cryptocurrencies, the fourth waves are commonly more brief than the second waves. I'm just wondering, could I see primary one over here? No, because then it would just be grossly disproportionate between 4 and 2. Oh, well, I think this is probably going to be the best wave count for Binance. Let's do a daily chart. And I want to have a look and see, first of all, does the third wave subdivide okay? And does the fourth wave have a complete Elliott Wave structure? So let's chuck some labels in on the third wave. It may only subdivide as an impulse. Oh, that's an interesting take mode of wave. I don't know about that. Well, it does agree with MACD, or actually other labelling could also agree with MACD. Let's put that on a weekly. No, I really don't like that. No, I think I want to have this down here. I agree with having the third wave over up there, but I think it's probably a long extension with an extended fifth wave within it. No, I don't think I want to see that there. Okay, let's go back down to the daily chart level now and see how that works. So I'm going to see minor one over here, and this looks like a perfect impulse. Let's expand this out so I can show you what I'm seeing. Nope, I see a series of overlapping first and second waves, 3 of them to start off. But is the middle of the third wave going to work? No, I want to see this over here. Is this going to work? I think it is. Beautiful. That's a really nice looking impulse. And 2 looks like a pretty obvious 3-wave structure, doesn't it? Could have some kind of diagonal for A. That's okay, I'm not going to spend too much time on that. The key is the middle of the third wave. Is it going to work? Yeah, pretty sure it is. I think the 4th wave might have been a triangle. This looks like another triangle. I think this is going to work just fine. There's so many different little subdivisions in here. It depends on how you label them, is what degree you label each subdivision as to whether or not the impulse is going to work. Nope, I want to see this over here. Probably have to move this up here. Curious as to see if this is going to work here. Yep, that's going to work. I don't know if the middle of it's going to work there. I'll put this here. I think I want to put that there actually. Could this be here? Is that going to overlap? No, yeah, no, this has to be up here. Okay, I think that's going to work okay. Now let's take a look at this 4th wave. Could it be a complete corrective structure? I'm going to have to start on the weekly for that. Okay, it may look like best as a single zigzag. Nope, I want to put A down there. Now let's go back to the daily and check the subdivisions. I don't think there's going to be any problem with seeing A as a 5-wave structure. Nope, I'm going to put this here and this probably here. Oh, I think this has to be here. And now this is going to work nicely. Yep, that's really good. B looks like a zigzag. Nope, I think I want to put this here, this an expanded flat, and here an impulse for an extended C wave. Nope. Is this going to overlap? Oh yeah, it does. Well, this could be another expanded flat, which would mean there's no overlap. The high of 1, 316.19077, the low of 4, 320. 4 does not overlap wave 1 price territory. Motive Wave thinks that the rule is 4 shouldn't overlap 2. That's not what the rule says. So when it does that, I do this. I ignore that because it doesn't meet Elliott Wave rules. This looks like a double zigzag for minuet 4. Okay, but let's look at minus C. Is minus C over? Oh, goodness, I have to squish it up a bit more. A bit squished, isn't it? This absolutely looks like the end of a 3rd wave. It's got that lovely curved look to it. Could this be a leading diagonal? Oh, yeah. I was checking the wavelengths. 3 is longer than 1. 5 is longer than 3, 4 is longer than 2, that looks pretty good. The trend lines are definitely going to diverge. Yep, that looks good. And 2 and 4 are very deep. In diagonals, the 2nd and 4th wave corrections are normally very deep, between 0.66 to 0.81. Gee, if I do this, is this going to subdivide as an impulse? Yeah, it is. Nice. And I think then 4 is an expanded flat. Okay. Alternation between 2 and 4. Not great proportion though between 2 and 4. This 5th wave has a beautiful curved look. That's so typical of commodities and cryptocurrencies. That's what I think I'm going to focus on for my presentation on the 17th of August. I'm going to look at the concept of extended 5th waves in cryptocurrencies and commodities. What do they look like? Where do they occur? And what's the implication for what happens after them? Here's an extended 5th wave. Minuet 5, 243.44 is longer than Minuet 3, 231. Well, they're both extended really. Minuet 1 is not extended, Minuet 3 is extended, Minuet 5 is also extended, and it has this typical curved look Fifth waves to end third waves 1 degree higher are so commonly extended in these markets, and they have this curved look. They end with really strong movement. So I'm thinking I might cover that. Okay, well, it could be a complete structure. I can see a complete zigzag for intermediate 4. I'm just going to put very briefly those labels in here. No, I want it like that. So let's look at some technicals and let's compare this low maybe to this low down here in December 2018. I'll look at this low first, and then and maybe this one briefly, and then I'll compare and contrast to this current or last low. So let's go and look at the low for some technicals for November or December 2018. I want to look at both weekly and daily charts for these lows for Binance, because that's going to give us more clues than just looking at dailies. So this is going to take a little while, but I think it should be worth it. The first thing I note in regarding candlesticks is there's a very good strong bullish engulfing candlestick here. This is the week beginning 16th of December 2018. It's coming up off this low, and along with these other two candlesticks, this could be, well, it's not perfect, but it's a reasonable looking morning doji star. Nearly a doji, this candlestick, almost a doji. Does this have support from volume though? The third candlestick is stronger than the second candlestick, but not the first. So there is a little support from volume, and that buyers come into this third session more so than they did the previous downward session. So downward session here, or rather an inside session that's closed red, and then a obviously upward session closing strongly green, and buyers come in showing an increase in volume. So yes, there is some support from volume on that bullish candlestick. As price comes up off that low, it's very obvious that volume is strongly pushing price higher. The volume profile in following weeks is strongly bullish. On balance volume exhibited no bullish divergence at the low, and it gives a bullish signal on this week here when it breaks above a resistance line. So in weeks immediately following, we get a bullish signal from on balance volume to support the view of a low in place. For this downward trend at the weekly chart level, ADX only finally at the end caught up with that, indicating a trend change back here when the negative DX line crosses above the positive, but the black ADX line doesn't start to rise until just 4 weeks before the low, so it was very slow to catch up with that trend. At the low, ADX did not exhibit an extreme downward trend at the low on a weekly chart level. At the low, or the week after the low, RSI almost touches, and it might have just dipped in to oversold. I can't tell what the reading is here at that low, but I suspect it could have just been slightly oversold. So that downward movement reached extreme. The trend wasn't extreme, but in regards to strength, price was extreme. Money flow index at the low, at this low here, let's see, price closes here 5.9305, and here the close 9.55. So price has closed lower, money flow index has moved higher. So just after the low on the bullish candlestick, there is bullish divergence between price and money flow index. ATR mirrors price, it declines throughout this downward movement, reaching low levels at the low, flattening off as price starts to come up off the low slowly, which is normal behaviour for cryptocurrencies, and then starting to increase as price moves up with strength and push from volume. Stochastics oversold at the low did not exhibit any divergence. What about the daily chart level for this low? The low was found on the 7th of December 2018 at 4.189971. There is no bullish candlestick pattern at the low, but there is a bullish long lower wick. Here's a couple of more bullish long lower wicks. I pay attention to wicks because they do often tell us the direction, at least for the short term, of the next trend. We see bullish long lower wicks here, results in some upward movement, bearish upper wicks here, results in some downward movement, a bullish long lower wick here. That was the end of the downward trend. Immediately following this low, we have an inside session that closes green, and it lacks support from volume. If we look at the volume profile immediately at the low, it actually looks a little bit bearish. We see price fall of its own weight, price is declining with declining volume. These upward sessions were quite bullish, volume pushing price higher, but we immediately after that got lower lows. Lower lows with declining volume, but then we see some upward sessions with even weaker volume. Downward session here, weaker volume. Upward sessions, still weak volume, but the downward sessions are weaker than the upward sessions. Still, we get into these sessions here and we start to see a strong push from volume pushing price lower. So that would have been a bit confusing. It wouldn't have been until you really get into here that you really start to see volume strongly pushing price higher, and the volume profile by this point starts to become quite clearly bullish. Would have been a little bit difficult to read back here. I think the only giveaway would have been that when you have subsequent upward sessions, they exhibit stronger volume than immediately prior and following downward sessions. Upward sessions stronger than downward. Upward sessions stronger than downward. Upward sessions stronger than downward. Until you get to here, that's a little confusing. But again here, upward volume pushing price higher. Again, but confusing with a strong downward session. Volume pushing price higher, but again a bit confusing with another strong downward session and price falling of its own weight. I think early on the key was looking at subsequent upward sessions. Was volume pushing price higher, and was it stronger or weaker than prior or immediately following downward sessions? And your volume profile here could have been read as bullish. Not very clearly bullish, but I would have read that as bullish. Again, these cryptocurrency lows are really hard to identify. This is so difficult. They're a lot harder than the highs. Just prior to the low, we would have had a bullish signal from on-balance volume. Now this would have been a really good one. It's at the daily chart level. This line is not long held, but it's close to horizontal and it has multiple tests. Those are things that indicate the technical significance of a trend line, those three aspects: slope, number of tests, and how long it's held. The more shallow the slope, the stronger technical significance. A greater number of tests, greater technical significance. Longer held, greater technical significance. So this one has some reasonable technical significance. And we would have seen a bullish signal with a break above resistance of that trend line on this upward session prior to the low. At the low, the close here, 4.52865, compared to this close here, 4.91. Okay, price is closing lower. Price is closing lower. On balance volume is moving higher. So there was also bullish divergence at the low with price and on balance volume. This would have been an important indicator, giving us a bullish signal breaking above resistance and bullish divergence at the low. At the low, ADX at the daily chart level reaches very extreme. The ADX line is above both DX lines and it's also above 45, indicating a very extreme trend. Wasn't very extreme at the weekly chart level, but it did get very extreme at the daily level. There is strong bullish divergence between price and RSI. I don't even need to check the closing prices of these candlesticks. It's very obvious. RSI is moving higher as price is moving lower down to that low. Strong bullish divergence after RSI reaches quite deeply oversold. That's a strong bullish signal in conjunction with on-balance volume and this bullish bullish volume profile. That would have been not totally conclusive, but a strong indication of a sustainable low. And again here, money flow index also exhibiting bullish divergence. ATR increasing with downward movement and at the low showing a little bit of a decline. Declining also off the low. That's absolutely normal. These cryptocurrencies do tend to move slowly off their lows. Stochastics exhibited also bullish divergence at the low. So at the daily chart level, this would have been a little bit more clearly bullish than at the weekly chart level. Let's look at the next low. This is the low on week beginning 8th of March 2020. And this low 6.963391. At the low, we see a strong red candlestick, a selling climax. Well, no, not quite, because it didn't exhibit an increase in volume, but it's a very strong red weekly candlestick. It has a bullish long lower wick. There is no bullish candlestick pattern at the low. This body of this real candlestick has not closed far enough in the real body of the prior candlestick for this to be considered a piercing pattern. And so it's not a bullish candlestick reversal pattern on the weekly chart. This would have been really difficult to identify at the weekly chart level from the volume profile. Up off this low, we see overall a decline in volume to the low, but the downward week exhibiting stronger volume than the previous upward week. But immediately bullish weeks up off the low did not did not indicate an increase in volume. This week here is actually an upward week, but it's closed red. It's a doji though, so I wouldn't really read that as a balance of volume being downward. It's an upward week, and up to here, overall volume showing a bit of an increase. Here, price declining, volume declining, price increasing, moving higher, volume pushing price higher. Okay, overall, it would have been overall leaning bullish, but not a very clearly bullish volume profile after that low. At the low, on-balance volume exhibited strong bullish divergence. The close here, 10.14. The close here, 13.38. Prices closing lower. On-balance volume, corresponding points are higher. This downward movement in price does not have a corresponding decline in the balance of volume. That is bullish because volume is not so strongly pushing it lower. At the low, ADX barely indicated a downward trend. The DX lines had been whipsawing. The negative DX line was above the positive. The ADX line was above 15 and rising at the low, but no extreme trend. Plenty of room to go before that trend could have become extreme. No bullish divergence, or we might have actually seen a little bit between price and RSI from this point to this point. I think this point is a little higher. Very weak though. A lot clearer with money flow index, and that's why I'm adding it in. So there's bullish divergence between these points between price and money flow index on the weekly chart. ATR moves mostly with price. It declines throughout this bear market until it gets to the end of the bear market and suddenly shows some increase. Flattens off and declines as price moves up off the bear market. This is an important point that we should really take note of. This is very common after sustained lows in the price history for cryptocurrencies. The range up off these lows and early volume is often very weak. We don't expect to see V bottoms on these markets. That's not how they form. I'd look for that on an index, not on a cryptocurrency. Let's look at the daily chart level. Okay, same low at the daily chart level. This is the low, 13th of March 2020, 6.963391. I've just checked the length of this candlestick in relation to the real body. It looks longer than twice the length of the real body because of the scale of this chart, but arithmetically it is not twice the length of the real body. It's just under, and so this is not technically a bullish candlestick pattern. It's not a hammer. A hammer requires the lower wick to be twice the length of the real body, but this is a very bullish long lower wick. It does have push from volume within the session, pushing price higher, and so I'd read that as bullish as well. Let's look at the volume profile up off this low. How did it behave? Initially, volume declined on upward sessions, again declining on upward sessions, so that would have been really hard to identify. It's not until we move into these upward sessions that we start to see volume clearly pushing price higher. Downward sessions come with declining volume. Upward sessions, volume pushes price higher, and this is confusing. Overall volume declining. A downward session pushing price lower. An overall volume declining. That would have been really hard to identify at the daily chart level. This is another reason why I keep saying lows for cryptocurrencies are much harder to identify than their highs. What about on-balance volume? I'm seeing quite a lot of bullish divergence actually over the long term from on-balance volume at that low. Here, the low close 10.833, close of this 16.976. Price is closing a lot lower, but on-balance volume is moving a lot higher. There's a lot of weakness in this downward movement, so that would have been quite bullish. At the low, ADX indicates a downward trend. It only reaches extreme a few days after the low though. No bullish divergence between price and RSI at the low. RSI did reach oversold. A little bit of bullish divergence between price and money flow index at the low. Money flow index did not reach oversold. ATR declines throughout much of this bearish movement here, approaching the low, and then increases at the low. That's a pretty common behaviour for cryptocurrencies as they approach sustainable lows. They do tend to end that downward movement with some quite strong downward movement, sometimes with selling climaxes. This isn't a selling climax, but it has ended quite strongly. And stochastics, oversold, may have exhibited a little weak bullish divergence. Okay, let's compare and contrast those two lows with the last one. Now we're looking at the last low. Week beginning 12th of June 2022, 184.54. We want to answer the question, does this low look like it's sustainable? This downward movement has ended with quite strong downward movement. There is a bullish candlestick pattern off this low on the weekly chart. This is a piercing pattern. However, it lacks support from volume. But remember, we don't always see the first candlestick up off a low for a cryptocurrency having support from volume. Just because it lacks support from volume for this kind of market isn't as much of a concern as it would be for other markets, given past behaviour. At this point, I would definitely read this volume profile as bullish. We've got 1, 2, 3, 4, 5 green weeks in a row. 1, 2, 3, 4, 5 weeks in a row of upward movement, green candlesticks on the weekly chart, all of them with an increase in volume. This is bullish. There was no bullish divergence between price and on-balance volume at the low, and no signal from on-balance volume either. RSI belatedly has told us, well, it did tell us within this downward movement there was a downward trend. It's only just after the low told us the downward trend reached extreme, but not very extreme, as it reaches above both DX lines but not above 45. And now it's declining. This is based on a 14-week average, so it's a lagging indicator. So just because it's lagged after the low doesn't mean that there has to be more downward movement. At this low, RSI at the weekly chart level reaches oversold. I would read that as quite bullish. There's no bullish divergence between price and RSI, but it looks like there may be between price and money flow index. What's the close here? 197.04, and the close here, 297.38. Between this point and this point, price is closed lower, money flow index is higher. There is bullish divergence between these corresponding points between price and money flow index. ATR declines throughout much of this downward movement, shows a little bit of levelling off at the end on the weekly chart level. Stochastics doesn't indicate any bullish divergence and was oversold at the low at the weekly chart level. What about the daily? At the daily chart level, there's a strong bullish candlestick pattern, a very strong piercing pattern. This real body has closed well within the prior real body. It hasn't engulfed the real body, so it's not a bullish engulfing pattern, but it's a very strong close in here. This is a strong piercing pattern. It lacks support from volume though. But again, for these particular markets, just because a bullish candlestick pattern lacks support from volume, we have a little bit of suspicion about it, but not too much, because that is sadly normal behaviour. Immediately up off this low, there is some decline in volume as price is moving higher, and now we see price being pushed lower in these downward sessions. It's not until we get into here that we're starting to see volume actively, obviously pushing price higher. I would read this early volume profile as leaning bearish, but now I would read this as bullish. And this also meets up with other prior lows we've looked at in this video. They're not always immediately obviously bullish off the low. At this low between price and on-balance volume at the daily chart level, there is bullish divergence from this point to this point between price and on-balance volume. At the low, ADX reaches very extreme, indicating a very extreme downward trend, and RSI exhibits some bullish divergence. From this point here, the close, 222.50578, to this low here, the close, 197.043, price is closing lower, RSI is moving a little higher. That's bullish divergence. Corresponding points between price and money flow index are bullish, and then money flow index makes another low after the low on this session here. That's interesting. Throughout this downward movement, ADX declining, at the end, at the daily chart level, showing a sharp increase to the low. Absolutely normal behaviour when these cryptocurrencies end a trend. I would read that as bullish. At this low, a little bit of bullish divergence between price and stochastics. I think there is enough technical evidence to have a fairly strong suggestion that this low for Binance coin may actually be sustained. And I'm happy with this Elliott Wave count. It has a good look. I think that Binance may have finished a fourth wave at intermediate degree. My only question for my Elliott Wave count is this from this low to this high? Is this primary wave 3 or intermediate 1 within primary 3? If this wave count is wrong, it may not be bullish enough. Okay, that's it from me with an update for Binance coin for you. And thank you so much if you managed to get through the end of this very long video. I hope you understand why I wanted to go through those prior lows with some technical evidence for you and compare and contrast to the last one to try and have a look. Is it sustainable? If you haven't already registered for the upcoming event on 17th of August, please do so. I need to get at least 200 registrants, so clicking on the link in the description box down below and registering would be giving me a lot of support. Thank you so much.